Quant Mutual Funds, the fastest growing mutual fund in the country with assets under management upwards of 90,000 crores, is in trouble. SEBI has conducted search operations at 2 locations in connection with the case. Why? SEBI suspects Quant has been front-running. And in that regard, SEBI has also questioned Quant Mutual Fund dealers and persons connected with the case. In response, the fund has issued a statement in which it underscored that it is cooperating with the regulator. I'm Abhishek Singh and you're watching The Mint. In this video, I will explain what's front-running. In very simple words, it's a method used to manipulate markets. It is known by many other names, including tailgating. But what is front-running? Well, for it to work, what's needed is a person or an organization which is ready to exploit information that is not public. Let me break it down further. In a circular issued in May 2012, SEBI defined front-running as usage of non-public information to directly or indirectly buy or sell securities or enter into options or futures contracts in advance of a substantial order on an impending transaction in the same or related securities or futures or options contracts, in anticipation that when the information becomes public, the price of such securities or contracts may change. It is, of course, considered unethical, mostly because brokers or dealers trade in equity based on the information before it is provided to their client, which gives them a sure shot chance of making a profit. A fund manager or broker buys or sells securities in advance of a substantial order, or takes a future or options position on an impending transaction in the same or related future or options contract is nothing but cheating. But what's the difference between front-running and insider trading? So by now, it must be clear to you what's front-running. Now, some of you might think that front-running sounds very similar to insider trading. And you're right. However, there is one difference, and that is, in case of front-running, the information does not pertain directly to a specific company. In the case of insider trading, the information is confidential, company-specific, and not available to the public. Another way to do it is by using a particular analyst's recommendations before they are made public. Now, analysts give their client recommendations on buying, selling, or holding stocks. When such recommendations are used by brokers before it reaches the clients, it is considered front-running as well. The buy-buy-sell and sell-sell-buy methods. Commonly used patterns for front-running are buy-buy-sell and sell-sell-buy. First, let's talk about the buy-buy-sell pattern. In the buy-buy-sell pattern, a front-runner uses non-public information to place his buy order before the client's order to buy and then sells. And just the opposite is the sell-sell-buy pattern. The front-runner places a sell order before the client and then buys the shares. As per SEBI, the board of trustees or the trustee company that holds the property of the mutual fund in trust for unit holders must furnish every 6 months a certificate declaring they're satisfied there have been no instances of self-dealing or front-running by any of the trustees, directors, and key personnel of the asset management company. Front-running is illegal in India. In a May 2001 circular, SEBI said any transaction of front-running by any employee, directly or indirectly, is strictly prohibited. For this purpose, front-running means any transaction of purchase, sale of a security carried by any employee, whether for self or for any other person, knowing fully well that the AMC also intends to purchase, sell the same security for its mutual fund operations as per the regulator. And it is this that the Quant Mutual Fund has been accused of. This is a developing story. I'm Abhishek Singh and I will bring you the further developments right here. So please don't forget to like and share this video and to subscribe to The Mint.